Hello, thank you for joining me. My name is Scott Newhouse. I am the host of Retirement Clarity Radio, and I'm so glad you are with me. For those of you who are new, the way this podcast works is we're going to talk about around 4 to 5 episodes on one single topic. So we started off with Medicare, and we had a series on Medicare, and then we had a series on Social Security. We are transitioning into retirement and taxes for the next 4 to 5 episodes. And these episodes are largely going to be based off of my book, The Retirement Tax Bomb: How to Protect Your 401k from Impending Tax Increases and Create a Tax-Free Retirement. You can get that book as well as the 2 other books I've written on retirement planning issues at freeretirementbooks.com. Again, that's freeretirementbooks.com. But if you just want to listen, this podcast is going to be the place to be. Make sure you download, subscribe, whatever, to Retirement Clarity Radio. Okay, let's get into this very first episode. It's going to be on the shorter side, and then we'll go into more details in the subsequent episodes that will be released each week. Okay, so for the first episode on taxes, I want to talk a little bit about historically what tax rates have been, what they are today, what changes are going to come in the future, as well as who can best benefit from the strategies and the ideas that we're going to be talking about. And I should say this, there's a disclaimer at the end of this podcast. I should say it again at the outset, since we're talking about something as so dependent on your individual circumstances as taxes. Please seek out a CPA, a certified financial planner, someone with experience on these types of issues before you take action on any recommendations that I give in here. And actually, let me backtrack from that. I don't give any recommendations. I'm just talking potential strategies, some ideas. You really need an expert to guide you through this, unless you're super confident that you can do it on your own. But again, nothing in this podcast, nothing in this series is going to be a recommendation on anything that you should or should not do. Okay, disclaimer out of the way. Let's talk about historically what tax rates have been in our lifetime. And I'm not talking about, from the very inception of this country, what tax rates were. Obviously, it's changed since then. But I do have a question for you, and maybe you can try and answer, and I'll give you a couple seconds to try and answer it. But do you know what the highest tax bracket in this nation was in its history? Take a couple seconds to give it a guess without looking into Google. And I'll tell you right now, it was a whopping 94%. Yes, in 1945, the highest income tax rate was 94%. And that rate has actually dropped throughout the last 7 decades. And let's just go through it here. In the 1960s, the highest tax rate for people earning the highest income decreased to 70%. So it went from 94% down to 70%. And it remained at that level throughout the 1970s. In the 1980s, that rate dropped even more, down to 50%. And now today, and I'm recording this in March of 2021, but today, former President Trump in 2017 signed tax cuts that lowered that top rate down to 37%. So I'm sure you have, but I have to ask you, have you noticed a big trend here? Over the last 7 decades, our country has continually lowered our tax rates. And in my mind, right now, we have a historically low tax rate. And I think that presents a lot of opportunity for people who are close to retirement. And now let me pause 1 second here to talk about the Trump tax cuts that, again, were signed into law in December of 2017. They actually have something called a sunset provision. So what it is essentially the tax cuts went into effect in January 1 of 2018. So signed in December of 2017, go into effect tax year of 2018, and they sunset at the end of 2025. What that means is if Congress doesn't make any changes, and obviously we have, President Biden, a Democrat, Democrats, have a slim majority in the Senate and the House. So if no tax changes are made, if nothing is changed tax-wise, the old rates will come back in 2026, in January 2026. So the Trump tax cuts signed from 2018 all the way up until the end of 2025. If Congress makes no changes, those rates will increase. And obviously, Democrats have different proposals on what tax rates should be changed in the interim period. So if that legislation gets close to passing, if it does pass, I will update this podcast maybe with a new episode, and I'll just throw it in there to talk about what it means for you and your family, and really try and dig out all the details on that. I don't want to go too specific on every single proposal because there's a million proposals out there. But when something's getting close to getting passed, that's when we'll drop a new episode and help you out on what that means. But if nothing is done, if no new legislation is changed, then tax rates increase on January 1, 2026. So that's what the sunset provision means. The rates will come back up. Okay, now who's going to best benefit from these next 4 to 5 episodes that I'm going to have on this podcast about taxes? It's especially for people anywhere from 5 to 15 years away from retirement. It is for people that have worked really hard their entire career, and now they want to make sure that they retire the right way and they get what they've earned. And then also, you do not want to pay any unnecessary taxes. I'm not for tax avoidance. I don't want to not pay taxes that you owe, but I don't want to pay more taxes than what you owe. And that's also for the people who are listening to that. If that resonates with you, then you definitely want to listen to these next few episodes. So what are we going to learn over the next 5 to 6 weeks? We're going to learn that the balances in your traditional IRA and 401k, they're not exactly what you think they are. We're going to talk about the best strategies to protect your money from impending tax increases. And we already are facing tax increases just in the way of Congress doing nothing, which we know Congress does quite often. And if they raise taxes even more, then we might have even higher tax increases than what's coming in 2026. We will also learn if and how to create a tax-free retirement. You're going to learn the right amounts to have in each type of financial account that you have. This is really important because, yes, we want you obviously to have a big balance of your investments in your investable assets, but it's also important to have the right amount in each type of financial account. And then we'll also talk about how, and we've talked about this previously, how Social Security is getting taxed by the government twice, and we'll talk about how to potentially avoid that extra tax payment. So that is essentially what we've got coming up for the next 4 to 5 episodes. I really hope you stick with me, listen to what we can do about your taxes in retirement, and make sure to go to freeretirementbooks.com. You can pick up a copy of any of my books, but especially the one about retirement tax bomb. So again, thank you for joining me. I'm looking forward to talking more about taxes these next few weeks, and I hope you all have a great week. Bye. Thanks again for listening. As a reminder, you should consult with a financial advisor familiar with the specific circumstances of your unique financial situation before making any financial decisions. Nothing in this podcast is a solicitation for the sale or purchase of any securities. Any mentions of rate of return are hypothetical in nature and not a guarantee of future returns. Scott Newhouse, CFP, is an investment advisor representative of Forthright Finances, a California and Nevada registered investment advisor.